The start of the year has been a rough one for cryptocurrency investors, with key coins like Bitcoin dropping almost 30% last month. The slide being felt across the entire sector as uncertainty around their ability to store value continues. Let's go to Ryan Rasmussen. He's head of research at Bitwise, and he joins us to talk some more about this. Thanks for your time.
Happy to be here.
What do you see as driving what is now an extended downturn?
I think that right now what we're seeing is momentum taking over the crypto market. We've seen sell-off across majority of crypto assets, not just Bitcoin, but Ethereum, Solana, as well as crypto equities. So right now we are in a bear market. We think we've been in a bear market now for a number of months, and sentiment is very negative and momentum's taken over, and we're continuing to slide lower.
Okay, why do you think the sentiment has gone this way? I mean, we're seeing tech sell off. We understand sort of what investors' concerns are with tech. It's a lot of cap spend. What do you think it is for crypto?
I think crypto is being hit by a few idiosyncratic risks that are being now priced in. Quantum computing risk is certainly something that a lot of folks are talking about across the crypto industry. And I think that's now being priced in a way it wasn't 6 months or prior to that. But I also think that liquidity is just low across the ecosystem. Investors are trying to figure out, is gold going to continue its run? Isn't there an AI bubble? How does crypto fit into this picture? And so sentiment from retail investors is certainly down. Now, I will say the institutional investors that we speak to at Bitwise every single day, including investors I've spoken with today in this week, believe this is an incredible buying opportunity and think that they're going to get great entries here.
Okay. Bitcoin, as you know, recently fell below 65,000 US. Some analysts looked at 70,000 and said it was a line in the sand. Do you see it as that one?
There's a few different technical levels that we're looking at right now. Most of those sit between 55 and 70K. So we've certainly broken lower than 70 and lower than 65. Our view is that it's difficult to catch a falling knife here, and that most investors are typically better off dollar cost averaging into these lows. What we've seen historically is that when Bitcoin has these major sell-offs, it creates wonderful buying opportunities, but timing that exact moment can be difficult.
Okay. Why do you think, or do you think investors are turning towards gold or other precious metals at this point instead of crypto?
Look, I think investors are really concerned with the outlook for fiat currencies. They see fiat debasement happening around the globe. It's happening here in the US. It's happening in other economies as well. They see the amount of debt that governments continue to go into, and they continue to not address those issues. And so they're looking for ways to hedge against debasement. And it's continuing to be a trend that we're hearing when we speak to investors. And what started as a central bank driven trade in gold has now moved entirely into a momentum-based trade that's driving gold and other precious metals higher. And I think that's reflective of investors realizing there is a need to hedge against fiat debasement and spiraling debt and spiraling inflation and irresponsible money management. And Bitcoin is one of those levers that can, and we believe will be pulled in the future to help hedge against that. That's exactly the market that it aims to serve. Right now, it's trying to find its footing as a newer asset, but we believe as this theme continues to grow, the need for a hedge against debasement, that Bitcoin is going to find a place in most investors' portfolios over the next decade. And that's why we believe that the long-term outlook for Bitcoin has actually never been brighter. The market it serves is growing at a very rapid pace.
Okay, so what do you think would need to turn this around? What in 2026 do you think could come to bring back momentum to the upside?
It's a really good question. There's a lot of catalysts that we see as long-term drivers of Bitcoin's growth. It's hard to pinpoint a specific catalyst in 2026 that could turn the market around. I will say that if Clarity Act, which is broad market crypto market legislature and regulations, gets passed this year, then I think that will be a positive catalyst. But long-term, the catalysts that we're looking at are institutional adoption, wealth managers and other financial advisors and money managers allocating to Bitcoin. We're also seeing growth of things like stablecoins and tokenization, which are really incredible use cases for crypto that we believe are going to revolutionize the way that assets move across the world and across markets. And then if we do see central banks starting to buy Bitcoin. I think that'll be a near-term catalyst that helps reverse course. But over the long term, institutional buying, regulatory tailwinds, growth in the store value market, and the need for a hedge against debasement, tokenization, stablecoins, these are all things that are long-term catalysts for Bitcoin. And the investors we're speaking to believe that those will be long-term catalysts to drive Bitcoin and the crypto market higher over the long term.
Ryan, can I get your take on the Canadian government's introduction of the Stablecoin Act and some of the requirements there, like asset reserves and redemption policy? What do you think of it?
Look, I think it's really important that governments around the world are starting to put regulatory framework in place for things like stablecoins. We were never going to see the massive growth in this technology and adoption of this technology until we had clear rules and regulation in place. So I think it's a huge step forward that governments are starting to do this. There's, of course, nuances that need to be worked out, but we believe that over the long term, stable coins and crypto will be on the right side of digital and the right side of these trends, and that regulators will find a way to embrace this technology, as will corporations, as will companies that serve consumers and other businesses and financial markets globally.
Ryan, I got to leave it there. Thank you for your time. Ryan is head of research at Bitwise.